Okay, guys, today we have a special guest out from Sydney in Barry Dawes coming to join us on the podcast. Barry, thanks for coming along.
Thank you for inviting me. Lovely to be here.
Fantastic. Now, Barry, what's happening in the market at the moment? What's exciting you?
Well, the gold price is certainly exciting me, and it's excited me certainly for the last 6 months, and it's certainly interested me in terms of the gold sector over the last 5 or 6 years. And I think I've probably got another 10 years at least of bull market ahead of us in the gold price and the gold shares, and I think we're going to see some very high prices for both.
Fantastic. Well, I hope you're right. Now, what are the cases or the fundamentals that you believe are going to...
Look, I've been looking at gold for quite some years, and obviously the more you look at it, the more you see things that you think are the driving forces. And it's been very easy to say, oh, yeah, the world debt problems or the US dollar's problem, all those things are what's driving gold, but they haven't satisfied me. But what has satisfied me is looking at the total amount of gold that exists. And that's about 185,000 tonnes. And all the gold that's ever been mined essentially is above ground and essentially available. I mean, obviously we've lost a bit here and there, but essentially it's all there. In jewellery, bar, coin, whatever. So if we look at that 185,000 tonnes, we can say, well, about half of that is in jewellery. And half of that 185,000 tonnes is in jewellery, and half of that, again, is in India. So we've got 45,000 tonnes of gold in India. And the gold in India, when it goes into India, doesn't come out. And we've got a reasonable amount of that in China and Middle East and so on. So almost half the world's gold ain't coming out. So if we look at the other half, the other 90-odd thousand tonnes, we've got the central banks with just under 40,000 tonnes, and they're continuing to buy. So that sort of leaves us with 50,000 tonnes to do everything else, coins, currency, and so on, and private holdings. And if we have a look at private holdings over the past 10 years, they're just continuing to grow. Central banks continuing to grow. So we've got to say, well, hang on a minute, where's it coming from and what's left? And the net position is that so much of the gold has gone to India and China over the past 5 or 6 years, more than Western mine production and scrap supply. So the inventory of gold that's available in the West has shrunk enormously. So there's not much left. So the people in Asia tend to be measured buyers. They buy and pull back. So when the gold price goes up, they sort of hold off. But in the West, now because they're covering shorts and because they haven't got any gold, they're paying up. So it's going to be the West paying up while the East will be there to buy any dips. So it's a strong bull market, short cover market, which will push the gold price to any level you want it to be. And on top of that, we've got all those other factors like the debt levels and so on. Now, the other thing which I find really interesting is this level of a negative interest rate debt that's out there.
It's crazy, isn't it?
It's crazy, and I call it the scam of the century. I mean, why the hell would you lend money to a politician, first of all? And secondly, when you look at the current round of politicians and the bureaucrats, all they want to do is spend more money and run bigger deficits, and they're trying to do more and more to spend more deficits to get inflation going and so on. So everyone is a lot of people are standing back in the markets. And here in Australia, we've got $1,580 billion of bank deposits at the moment. Now, the ASX 300 is only capitalised at about 1,800 billion. So we've got almost as much cash on the sidelines as there is invested in the market. Now, if you look at all that money, at the moment it's getting 1.5%, maybe if it's lucky, in savings, and 2% if it's lucky on the term deposits. So that $1,500 billion is generating next to nothing.
It's getting inflated away, wouldn't it?
It's getting inflated away. And they're talking about doing away with cash and forcing you to pay banks to hold your money and all this sort of rubbish. So people are going to say, well, hang on, I don't want to be here. And where do they want to put it? Well, they're going to put it in property. The property market ain't going to go down in this country. The equity market's not going to go down. I mean, look at the earnings that we've got from the BHPs and the Rios and the Fortescues and the gold companies. And people will want to buy gold because gold's fabulous to have, and silver. So I can just see the capital coming out of the banks and also coming out of the bonds, because, why would you, give all this money to these politicians who are just going to pay it up against the wall,
yeah,
and they're never going to pay it back. So it's pretty exciting.
Money needs to find a home, right? Like
Money
it
needs to
flows
go.
somewhere.
Yeah.
The interesting thing I find is that the argument against gold's always been that it produces no yield. But when you're in an environment of negative or flat interest rates, gold starts looking pretty attractive.
It is indeed. So, but that's just a little thing. But if we have a look at the bond markets, I mean, we've got 30-year Treasuries in the United States at around 2%. Now, giving money to people for 30 years and getting 2% return, and the central banks are doing all they can to push up inflation. I mean, the real returns on those bonds are negative right now, and they're just going to get worse. So it's just a suckers rally, and but we've got so much money tied up in the bond market. It's the biggest asset class in the world, and we only need $2 or $3 trillion of that each year, 2 or 3%, to go back into the equity markets, commodity markets of gold, and we'll see very strong markets over the next few years.
So do you foresee it? Well, at the moment, there's a bond bubble that's potentially going to burst.
Oh, absolutely, yeah. I mean, where are they going to get the money from? Who's going to give it to them? I mean, it can be up there because the lemmings rushing, because holy cow, we need it to get that last bit of income, but. Who else is going to buy it? Where's the money coming from?
Well, this is the thing. Like in the US, I can't remember which country it was. It was like no one wants to buy the US debt, and then that some small country do it, and then there's rumours that the Federal Reserve's actually buying back the debt. Well, that'll be the buyer of last resort. Do you see that happening?
Well, yeah. Well, I would like the US Treasury to sell as much of its 30-year Treasuries as possible, so it can push out the maturity of their $16 trillion of that debt. If you look at that, about 40% of it is sort of less than 2 years. Now, if you can get money and only pay 2% for it, you should sell as much of this stuff as you can, and push the repayment back down 30 years down the track and restructure the portfolio. Whether they'll do that, I don't know. It's not something which gets discussed very much, but it should be.
And do you foresee at the moment, obviously, there's heated talks between China and the US, or China and Trump, however you want to look at it. Do you foresee that potentially China could start dumping treasuries, or what do you see happening with that?
They've reduced a lot of that, but you've got to keep in mind that if they stay short, if they're doing 30 or 90-day stuff, I mean, there's no capital loss. If they go longer, there's a real chance of capital loss. You're only going to be looking at the currency. But the yuan is declining against the US dollar, so I don't think that's going to have much impact.
So is the Aussie as well. We're down 10-year lows, and it looks like it could keep going lower.
Oh, look, I'm not sure that's going to be right, because if you look in the long term, the A dollar has a very, very strong correlation with the North American gold stock index. And I've got these numbers going back 30 years or so, and the correlation is extraordinary. We're just a bit out of sync at the moment, but the gold stocks are moving up and will move up, in my view, very strongly, so the A dollar will follow that up. And also, if we look at the A dollar against sterling and A dollar against the euro, I think that we're in a stage where we're about to move very sharply up against those two currencies. So I'm quite positive about the A dollar. And if you look at our export numbers in terms of our LNG exports and our iron ore exports and so on, that's certainly helping us a lot.
Yeah, absolutely, the weaker dollar. And do you foresee, we had a chat, as I was mentioned earlier, with Jim Rickards during the week, and he's obviously got the book Currency Wars. And one of the things he was saying is, like, we're looking at them, obviously, currency versus currency, but do you see it as a race to the bottom? And if you actually value it rather than currency against currency versus gold, that all currencies are going down versus gold?
Oh, look, I think that's true, yes. I've been watching the gold price in all sorts of currencies, and I think there's about 80 currencies that the gold price has made a new all-time high. And I've been watching very closely the gold price breaking the downtrend from 2011. And the yen was the last one to do that, and that was about 3 months ago. But interestingly, the gold price in yen has actually gone to a new all-time high. Now, it hasn't gone to a new all-time high in US dollars, in yuan, Swiss francs or euros, but it has in pounds, has in A dollars and Canadian dollars and so on. But we're seeing people really wanting to hold gold more than currency. So there's going to be something that happens over time. Whether it happens quickly or takes a longer time, I don't know. But there will be some return to some sort of gold standard, because we just can't have these politicians and bureaucrats spending money willy-nilly and running deficits forever.
And I 100% agree with what you're saying there. And what do you feel is is there one key thing that caused that problem, or is there a systemic, what's the one or number of issues that you see that have led to this brewing problem that?
I just think that it's time, and the different generations of bureaucrats and politicians and central bankers. We don't seem to see the strong leaders anymore that we saw 20, 30 years ago. We don't
would be considered toxic masculinity these days, wouldn't it? Or I suppose women can be leaders as well, but you know what I mean? Like it's the West has gone pretty soft.
Yeah, in lots of ways, and with so many career politicians who really aren't thinking about what is best for the populace. They're more thinking about what's their legacy is going to be and what their pension might be and all this sort of stuff. And to a very large degree, they've grown up in their own silos of being a party apparatchik, not having run a business or worked in the real world, and consequently they don't see the things the way Scott Morrison talks about the quiet Australians, that because they're the ones that have got to be out there in the struggle streets of this world and making a dollar every day. And the other thing, from my point of view, which is really important, if you've got a small business, or if you're in business, you've got customers. If you're in government, you don't have clients. You don't care if they don't come back to you.
Well, that's the thing. These politicians have never balanced the book, and now all of a sudden they're running the country's book, and it's like you can't expect them to be able to know what they're doing or how to do a good job.
Absolutely. So
they think money grows on trees, right?
Yeah. So it's the evolution, and there's got to be a change, and I think the gold price is going to tell us that change is coming, and something will happen with currencies, but we might find that the gold price is totally disconnected from currencies, and it'll run its own little race, as will other commodities, and the US dollar and the euro and the yuan and the yen might still be carrying on the same way they are, but the gold price will be quite disconnected from that.
And when do you two questions to follow on with that? Like, when do you foresee this coming? And B, what are your take on the comments by Carney this week from the Bank of England talking about bringing in a digital currency to rival the dollar?
Yeah, look, I'm not sure how that's going to go, because I don't trust the digital currencies. I much prefer to trust gold. And even if we have a much higher gold price as part of a revaluation or reset or whatever, the real value of gold and the real value of keeping your currency sound will come through. To think that politicians say, "Oh, I want to bring the currency down to stay competitive." Well, having a lower dollar, whether it's an A dollar or a US dollar, is basically reducing your wealth. So if we've got a lower A dollar, it means that if we import anything from Japan or the United States or Malaysia or whatever, it's going to cost us more. So our standard of living is falling. So the best thing for us is to have as strong a currency as we possibly can.
Well, that's the thing. They always say it's good for exports, but I'm like, well, who do you know that actually benefits from exports? You know what I mean? Like, day-to-day people aren't really, most people aren't benefiting from exports.
That's right. I mean, it's fabulous for the iron ore producers and so on. But, we import so much of our manufactured goods requirements and a lot of food, so it's costing the man in the street. The best thing is to have the A dollar well above parity and force our industries to become more and more competitive and more productive.
Yeah, I agree with that 100%. It's interesting what you said earlier about central banks, because it does seem, I think if people actually understood money and how it worked and the history of it, like getting off the Bretton Woods system when we were backed by, the US dollar was backed by gold, and if people actually knew the story of that, like, I don't know if you've read the book from Jekyll Island or
No, I haven't, but I've certainly followed, and it's also interesting to go back and see what Roosevelt did when he devalued the US dollar against gold, confiscated gold first, and then devalued the dollar against gold. It had a massive reduction in wealth, and but the whole point is having the gold standard there really means that you can't run these deficits. Now, all this modern monetary theory that people are running around with at the moment, I mean, this is a disaster. Absolute disaster. It's fine while we've got all these lemmings willing to buy this crap paper at no income. They're going to wake up to the scam, and then suddenly you're going to have all this debt that you're not paying 2% on a 30-year Treasury. You might be paying 5% or 6%. And you've got to remember, back in 1981, that these were 14% on a 30-year Treasury. It means that the budget deficit in the US just goes through the roof, and your interest becomes your biggest expense, and there's no way out of that. When we start looking at Europe, I see the problems in Europe as being far worse than they are in the United States.
And just with that, because you're right that these governments are amassing these debts that are just absolutely staggering and mind-blowing. The US is 22 trillion, but unfunded liabilities, they're just never going to pay that back. It's in the hundreds of trillions.
Yep.
So how is this going to play out in your eyes? We're seeing social unrest, we're seeing people trying to get into cryptos and alternative systems.
Yeah, look, there was a view running, 30 years ago that fiscal discipline was a reflection of moral character, and but now we've got so many people who don't care, who are politicians and bureaucrats. They don't care, and so the morality's gone and the fiscal rectitude is gone. So that's why we've got to have some sort of gold standard to bring that back, that sense of obligation that an individual has to all the people that he works with. He's got his obligation to his family, to his employer, or the employees, and your customers, and so on. And everyone wants to be honest and straightforward, and know that they can trust the people. Now, when you get a government that decides to change all the rules overnight, or says, "Oh no, we're not going to have. You can't have more than $10,000 cash, or otherwise you're 2 years jail." I mean, hey, this is not working in the favour of the common man, and it's working against them, and it's reducing trust. So it's all a matter of confidence, and when the confidence is gone, who wants to buy this crap paper that you'll never get your money?
We used to be in gold we trust, and now it's in God we trust in the US. they casually just removed the L there, didn't they?
Yeah, and the other thing, there was Samuel Clemens, otherwise known as Mark Twain. He was always talking about the return of his money rather than return on the money. And I think with 2% on a 30-year Treasury, it's a matter of return of your money, and it won't be there.
Yeah, I think a lot of people are looking to preserve wealth in potentially what's coming up ahead. And just for people that aren't aware of what Barry's talking about, the Australian government's proposing a limit of $10,000 in cash transactions. And we've reported on the website, you can see, and also they're trying to track $100 notes. Now, the method they always use is it's to stop, terrorists, and it's always a fear-based thing. But look, you might say it's conspiratorial, but I certainly don't think so. I think they're actually there's a global war on cash, and I think they're trying to bring in some sort of track and trace society and try to keep people in the system rather than being able to pull out of it.
I think that's really frightening. It's really frightening because if you look at the European Commission and everything that stands for, unelected bureaucrats in Brussels trying to tell all of Europe and all the world how to live. And the Nazis did it with their Panzer tanks, and now they're doing it with their Panzer banks.
Yeah, well, that's a good analogy on it. And funny enough, I was in Perth the other day, and I was working on the docks there, and Nigel Farage happened to be walking past.
Oh, really?
You wouldn't believe it. I've got a photo. I'll see if I can pop it up on the screen. People are listening. I've been following Nigel for a long time, and he's obviously started the UKIP party, which was a big part in Brexit. Now, Brexit's been demonised in the mainstream media, but whether you agree or disagree, this is one thing that people don't quite understand, which you just touched on now. You've got these unelected bureaucrats that are telling people how to live their lives. Now, the equivalent in Australia is if people in China were telling us how to live our lives here, and we had no say in it. That's what the EU is. And I don't think people get that. They're all like, oh, these Brexit people, they're racist. And it's like, no. They're not. Don't buy into that media crap where they label people.
That's why this Paris Accord is so bad. There's the empirical evidence on climate change is just not there. It's just not there.
Well, if you want to take I guess it's the conspiratorial route, but it's not really. But they set up, people don't even know who the Council of Foreign Relations or a lot of these think tanks are. They set up in the 80s, I think it was even in the 70s, they were going to basically look at ways they could control the public in the future. And the two ones they went with was, one of them was terrorism, and the other one was, the threat of terrorism, I should say, and the climate, the environment, because it's two things that you can never defeat. So it gives you ultimate control. So when you look at these things, I guess it's a tug of war between centralization of power, which is what we're seeing with the war on cash, or whether it's the EU and all these things, or people trying to move to whether it's the blockchain where it's a distributed ledger, or the nationalist, these nationalist movements. It's people wanting their freedom, and I think that's the ultimate battle that's playing out. And there's actually a direct correlation between monetary freedom and personal freedom.
Absolutely, yeah.
And I think that's where gold has played such a big role in society, and whether you want to say cash or physical cash, people have been able to decide what they do with their money. And now we're seeing that kind of struggle play out.
And one thing people need to be careful about is that as we get more and more government services and more government employees and people who are dependent on government handouts, when we eventually have these problems, the problems are going to be with government and its ability to pay all these people for whatever they are. And if you've got deficits and we start to find that interest rates rise and inflation rises, the people that are going to lose will be the people that are receiving fiat currency in distribution from government. If you're outside of that, and if you've got gold, if you've got your own business, if you're self-employed, whatever, you're not going to be subject to those things. And so that's going to be a big watershed moment coming.
Yeah, it'll be interesting to see how it plays out. And just while you mentioned climate change, that was the thing I was going to touch on. It's actually, they're trying to introduce a global tax. So I think if they reworded it and kind of made it like people want to focus on improving the environment, people would jump on board. But it's the same thing we were talking about earlier. It's this, you're getting taxed by this global monolithic, whether it's a bank, they'll try to run it through, and things like that. So with all that's going on, Barry, obviously people listening are going to wonder, okay, a lot of people understand what we're talking about or get it, or maybe this information is new to them, which is great. But the big thing they're going to want to know is how they can benefit from it and make some money.
Well, the great thing about the stock market is that it does give you the opportunity of making exceptional returns at certain stages, and the small mining sector and small technology and biotech and whatever give you those opportunities. The risks are high in the sense that not everything's going to work, but you will get some things that do work. Now, I've been talking today about Australian gold production, and gold production in 1980 was well under 20 tonnes when the gold price peaked in January 1980 at $887 on the 21st of January. That had no impact on gold production for about 3 years. But after that, by the time the Australian entrepreneurial mining sector got on top of that, we started seeing gold production rise. And over the next 10 to 12 years, we went from 20 tonnes to 312 tonnes of gold. Now that's a lot of gold, and we see this dramatic increase. Now that gold production was tied in with a boom in the gold sector. So people who might have participated in an IPO at 20 cents, because there were a lot of IPOs that came through to develop these new projects, and these things went to $3 or $4 or so, and people had the chance of making some real money in a relatively short period of time. And we've had a number of these booms. There might have been a nickel boom or uranium boom or rare earth boom or whatever. So it gives people the opportunity to make quite a lot of money, and it's really, really good for the economy. Now, when BHP and Rio are making a lot of money out of iron ore, or coal or copper or whatever, that's fine, but so much of that stock is owned by overseas investors or by the institute super funds and so on. So the money doesn't come into the marketplace. But when the speculative market moves up, that money goes in the hands of the small players. And so they make a lot of money. They go and buy a house, they buy a car, buy clothes and whatever, and it has a huge multiplier, and we also get a lot of foreign investment. So it's new money coming in and helps the money supply, and everybody feels great. It's a wonderful thing, and I can see that happening in so many sectors. I can see it in the gold sector. Now the big gold stocks have done really well. The little gold stocks are starting to move at last. I can see the same thing for copper. I see the same thing for iron ore and nickel and oil and gas and rare earths and uranium. And it goes on and on and on and on. There are just hundreds of companies, and they're all so cheap at the moment. You've got to do a lot of due diligence on them and just see what's going on. Only go with the people who have got good track records, and there's still dozens of companies to choose from. And you look for those companies which have got cash or they've recently raised cash, so they can go on with their projects. You don't need to take the real risk stuff. You can still go and buy stocks that for a cent or 5 cents or whatever, that can still give you 5, 10, 20, 30 times your money over the next 3 or 5 years. Now, my view of the world is that the trade problems between China and the United States are going to be resolved probably sooner rather than later, because that's what the equity markets are telling me. And we're starting to see that the smaller stocks move with recognising these development opportunities. Australia has about $250 billion of export revenue from the resource sector, and I can see that continuing to rise. Now, that is being reinvested in exploration, in some cases new capacity, but the mining industry, when it's got cash, does things, and it's just fabulous to watch.
Well, hopefully we can benefit from this run. And just to put some numbers on it, like what do you, 10-year bull run, like that's a long time. So where do you see things like gold heading to and over that period?
I don't want to sound crazy, but I do think there's going to be a real revaluation of gold and silver in the marketplace. So I think over the next couple of years we will see new highs in gold. Now the previous high was 1923 in September 2011. So here we are 8 years later, and the gold price usually doubles every 7 years or so. So I expect to see $3,000 over the next 30 months. And beyond that, I see much higher gold prices, much higher gold prices, for all the reasons that we've talked about. But I'm not part of the doom and gloom school, and I think these things will take place slowly. There will be times when there are major readjustments that might occur over a short period of time, but the trend is up. And gold is in a very, very long-term bull market. And it'll probably just keep rising, let's say in US dollar terms, for the next 50 years. It'll just keep rising. You've got to keep in mind that the gold price from 2000 to 2011, that was an 11-year bull market. And we're only probably maximum 2 years into this from the low at 1045. And I just see it running for a lot more than 10 years.
Absolutely. And if you look at the actual percentage terms that the previous bull markets are run, not to say that this is what's going to happen, but if you did look at in percentage terms, then yeah, the gold price is like $10,000 doesn't seem out of the question.
Absolutely. Yeah.
I think, a lot of people, it does seem like a lot, but you just got to study history really. Yeah. And you can see that these things, not that they always do happen, obviously things go down as well, but if it's happened before, it can happen again. So
Yeah, I think if you look at the numbers from 2000 to 2011 and being conservative about it, it was an average compound growth of 17% per annum for that particular leg. Now, if we go back to the lows that we saw at the end of 2015, early 2016, and look at the rate of change, the last time I looked, it was sort of 19 to 20%. So I think our angle of ascent in this bull market is going to be faster than the last one, so steeper.
I think so too. Like there's the volatility that we're seeing now. I think these big moves in a couple percent, like those percentages are getting bigger and bigger, just based on the environment we're in, and how things can change overnight. The news cycles are very short, and things turn on a dime. And you mentioned silver, and and I'm interested to get your thoughts because I'm a silver bull myself, more than gold in terms of I think it's got more to run in terms of percentage terms than gold. Do you see that, or do you see it as industrial?
I like to sort of go back to that point that we've got 185,000 tonnes of gold sitting above ground. If we think in terms of silver, we haven't got anywhere near that much. And because so much of silver is consumed and dissipated each year, the inventory of silver is quite modest. So when silver is going to be in demand, and when we look at the ratio of gold and silver, when that ratio starts to go the other way, and I think we've probably started going the other way, you should never trade on those ratios. You can invest on them but not trade, because it'll stay high for much longer than you can stay solvent, to quote or paraphrase Lord Keynes. But when it does move, I like to think that we're going to see quite a big price for silver going forward. And
is there any metal that hasn't gone past, and now it's obviously the Hunt brothers cornered it, but it's the only metal that's not above its 1980 high? Is that correct in saying that?
Oh, that's an interesting one.
Put you on the spot with that one, but I think that's we'll have to fact check that one if you.
Yeah, that's an interesting. Let me check. I like that, but that could be
you
right.
You can use that line.
I like that.
But it's very interesting with silver, like you're saying, it does get used up more. This is the bullish case, and I'll give the bearish case as well. But it comes out of the ground at 9 to 1, 10 to 1 silver to gold.
Yep.
The price ratio is 100 to 1, and the above ground reserves, like silver's used in such small, computers, laptops, phones, that it's not non-recoverable.
Yep.
So it ends up in landfills. It ends up in all these things.
It's dissipated.
Yeah.
But it's interesting. I did some work years ago, and I seem to recall that during the Medici periods in Italy, silver was more valuable than gold, and I have that in the back of my mind. And I say to people, when I think of silver, I think of palladium, and when I think of palladium, I think of silver. And what I mean by that is that the palladium price has really outperformed its the big brother platinum over the last 6 or 7 years quite substantially, and there'll be probably no reason why silver can't outperform gold in the same way over some period in the future. But that's my little foible, or something I like to think about.
No, it's interesting that. Like, even I remember when I visited the Medici town that you speak of it, and on the return trip, I lived in South America for a while, and in Spanish, plata or plato, I can't remember now, jeez, but it means silver. Like, their word for money is silver.
Yeah, I was right.
So that correlation. Now, maybe that doesn't hold true. So just to bring back the bearish case that people say for silver is that some say it's no longer considered a precious metal, that it's half industrial, half precious.
Nah.
I don't buy that, but hey, who knows?
Well, supply and demand. People, when the demand's there, they'll call it whatever they want.
Absolutely. All right. Well, thanks for joining us today, Barry. Is there anything else you'd like to leave our viewers with? What they should keep an eye on?
Oh, look. I did this presentation today, and one thing I wanted to make clear to everyone: the major Australian gold stocks, the Northern Stars, the Evolutions, the Newcrests, and I'll include Kirkland Lake here because of Fosterville. These stocks people think are overpriced. In my view, they're not at all. I've had a $20 a share target on Northern Star for the past 2 years, and I reckon I'm going to get there within a reasonably short period of time, for all sorts of reasons, and the main reason because the company's just very clever, and they've got excellent resources, and they're continuing to grow their resources, their production, and it's just a very clever company. Newcrest looks fabulous to me, and Evolution, just a cash flow machine, and Fosterville is just extraordinary. And when the Macassar mine gets up to full capacity a couple of years out for Kirkland Lake, that thing's going to do really well. But the point about is that people might have sold these stocks thinking that they're too expensive, but they're going to be the stocks that people buy, and they're going to be prepared to pay 20, 25 times earnings, a 4% earnings yield, if they think the gold price is going to rise. And most of them have repaid all their debt, so they've got a lot of cash, and they're paying out. Northern Star today has bought Echo out of cash. We're just going to see something that the mining industry in Australia has never seen before, and that is having a huge amount of cash. In the mining industry, when you've got cash, you do things. When you've got no cash, everyone feels miserable. They can't have their pet projects done because the bean counters are saying, no, we've got to conserve all our cash. When the cash is in excess of your budget, you can think about that project which improve your productivity, improve your output, reduce your costs. So all these things have a huge multiplier across the economy. It's just not a matter of the index going up. It's the broadening of economic activity throughout the industry.
Actually, and do you see that as like with that they're cashed up? Like you're mentioning Northern Star and Echo, and we're seeing a lot of merger and acquisition activity, and even the Barricks of the world and whatnot. Do you see that ramping up? And then also, do you foresee, now that these companies are cashed up, we're seeing in WA and Victoria, these governments trying to get their hands on some of that money. Is that going to happen as well?
Oh, look, you'll find the politics of envy there everywhere. But at the end of the day, it's going to be the people in the local district that benefit from it, and they're the people that should make their voices heard. If you've got gold mining in your area and providing it's done according to the rules, and you've got to keep in mind that the geologists are the greatest conservationists I know, and being a geologist myself, you go out in the countryside and you see it, and you see what's important, what's not, what can be, you can see how long it takes for things to be repaired naturally and rehabilitated. You notice what geomorphology is all about, and weather and so on. So these things can be mined, and you can bring them back. The area's looking good. You can change it. You can have lakes and whatever, or whatever you need to do. But the benefits to the community should be huge. Now, here in Melbourne, where's all the buildings in Collins Street come from? From the gold, and everyone wants to protect that as historic architecture and whatever. And you go to Ballarat and Bendigo and where else you want to preserve those things, but those sorts of buildings can only be built when the countryside's wealthy, and mining brings wealth.
Absolutely, it does. Well, thanks for enlightening our audience today, Barry. And as this thing plays out, I'd love to get you back on and get your take on things and go from there.
Thanks so much. Thanks for the opportunity.